Well, guys, are we witnessing it once again? Cracks appearing in the bonds market that we haven't quite seen boil over into risk. Well, as it turns out, some of the biggest moves in over 30 years have just appeared in some currencies around the world. And this has certain central banks starting to panic once again. But could it be the volume in the dark pool liquidity that tells us more about anything that Wall Street is doing right now? In today's video, we'll talk about why this is a point that we all need to be paying attention to and how big money seems to be flowing back into the largest hedges in the world. Stocks, commodities, and cryptos. Let's take a look at exactly what was happening with the biggest flows over the last 24 hours. Guys, this one's not to be missed. Let's get into it right now together. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we have a lot to discuss. The latest macro, the big data, and of course, what is Wall Street up to? Are they really buying this dip right now? And more importantly, are they selling into us as retail traders? As Warren Buffett mentions, he's going to step down at the end of 2025. The stock has taken a bit of a tumble. But really, the story right now seems to be in the calm before the storm. One of the most important technical levels and of course flow levels that we've seen in quite some time, arguably actually in over a month and a bit. So what exactly is happening as business optimism craters and future expenditure seems to be dropping like a rock? Well, basically we are not seeing the signs of what usually is a great investing market. And it has a lot of people concerned about whether Wall Street is really buying this dip or whether they're artificially inflating it. And this makes a lot of sense when we look at the buyback window, obviously opening back up after being closed, and earnings coming out from some of the biggest stocks. While earnings have been really good, it looks like buybacks could be artificially inflating the market. And while we already spoke about this once before, it does seem like basically no future expenditure is being put into growing a business and doing anything else. And the money seems to be driving into the buybacks themselves. A record number, $192 billion in buybacks, the highest ever recorded, even higher than 2022, has just been announced. And this basically means executives are juicing the EPS on stocks. So effectively, this is a potentially artificially inflated market. What do you guys think down below? Can this trend be set to continue? Recently, we talked about how they were mentioning that they probably wouldn't be doing buybacks like this in such great numbers. But as they're now not spending on the future, they've got nothing better to do than to buy their own stocks. And it seems to be particularly in the AI sectors. And this is really interesting because it's creating a greedy Wall Street once again. In fact, we went from extreme fear just a month ago, 3 on the reading, to greed once again as of the latest recording right now. And this basically means that everybody is back in. But is it the wrong type of person that's back in? Is it us, the retail trader, and actually not Wall Street themselves? Well, let's have a look at the latest data here from Deutsche Bank and Goldman Sachs. First up, Goldman Sachs data, funding spreads versus the SP 500. You'll notice here that funding spreads are dropping off a cliff. Now, generally speaking, when you're looking at funding spreads, you usually want those to be increasing. And you'll notice that when they're kind of like flat and sideways, that's okay. When they're increasing pretty strongly, that can obviously drive a very nice bull market such as over here. And when they're on a steep decline, it can mean subdued kind of gains in the future or even further selling to come, such as what happened in 2022. So is this exactly what is actually happening right now? Well, let's take a look at one of the big data points we've mentioned recently on the channel, which was that we're buying. Yeah, okay, the latest sentiment reports, what's it tell us? We're all supposedly scared, absolutely, and not buying anything. But as you guys know, retail traders have all been saying they're not buying, but actually the flows are so high. In fact, according to JP Morgan's latest report here, $40 billion was pumped in April just alone, and that's topping the biggest month ever, which previously was, of course, March. So who really is buying the dip? Well, on surface of it, it looks like buybacks are buying the dip. And of course, so the companies themselves and of course, retail traders, you and I. So could this cause a secondary dip in markets? More of that 1998 narrative, more of this kind of doubling bottom style market condition. Well, of course, we're at that turning point. We're at the period that we've talked about now for over a month, which is the 5,600 the 5660 zone, the danger zone as we've mentioned it. And we did just see something very weird happen on Monday, kind of like the calm before the storm, one of the lowest volumes that we've had in over a month. And in fact, if you take a look back here, according to TrendSpider, the low volume periods that we've had at these highs, maybe a coincidence, have often been turning points towards the downside. So the question then becomes, what is the flow telling us? And are we actually seeing a weak economy? Well, of course, if we take a look here at the SP 500 forward EPS, it's been pretty good. The earnings season has held true so far, and we already expected that most of the biggest companies, that is the big Mag 7 businesses, would do very well across the board. Part of the reason is because the way tariffs work is they often front load demand. In fact, something we talked about on our Monday stream, and we got a lot of, I guess you guys are insiders since you're going to the stores, we got a lot of evidence pointing towards people going into things like Lowe's and just buying stuff. People are just absolutely doing home improvements and all sorts of things before tariffs hit. So what we're getting is we're getting a front load. Remember, a lot of businesses hold 3 to 6 months of inventory. And then what tends to happen after that is we seem to see a demand fall off, which obviously then sometimes comes with deflation and can end up in a recession. And in fact, the latest poly market stats, which I don't have quite here, but I'll tell you them anyway, have that and this is a gambling website, so obviously you've got to be very, very careful about these, actually have a lot of divergence with the stock market. The stock market is kind of saying, less chance of recession. The poly market stats have higher chance of recession. Now, it's just interesting to note that because when you look at these stats, poly market actually has front loaded some of the stock market, and it could be seen as potentially a little bit of a lead indicator, at least on the latest reports. So a very interesting one there indeed. So let's now take a look at the earnings for this week. We just had Palantir earnings, and of course on the surface, as we'll look at them soon, they were another fantastic result. But the market had been ripping, so of course it was a buy the rumor, sell the fact. A lot of you guys were astute enough to probably recognize that factor on the Monday open before, of course, it did end up resulting. Now we'll find out whether AMD is a sell the rumor, buy the fact, and of course Datadog and others are coming out this week. Just remember, whenever you're looking at earnings, one of the big things that we do here on the channel is we make sure that you guys are aware, and we all have to be aware of this, of the options market volatility. Palantir was expected to move plus or minus 15% off earnings, and I think it moved about 9 to 10% down after hours. Datadog's meant to be plus minus 12. That's a big move. And AMD is plus minus 10. So when you're coming to these earnings, it's very important to know the implied movement of options, because otherwise you can be left with some big issues. So we already know that Wall Street is potentially selling into us as retail traders. We'll see that in a moment with dark pool liquidity. We also know that when the stock market creates structure as it has right now, that there is a decent chance that even if we do end up seeing sells, that bulls will buy back in. And one of the main reasons for this, of course, has been the Zweig breadth thrust, and also that we've recovered over 50% of the bear market so far. And the reason we call it a bear market is, of course, it dropped over 20% from top to bottom, and then it's recovered back over 50% of that. Now, in all cases since the 1950s here, we've actually seen, according to Ryan Detrick, we've generally seen the market never make a new low. There has been one case, though, where it did happen, and of course, that was 2022. So interesting stat, certainly one for the bulls out there. Now let's take a look at some of the biggest transactions. And as I mentioned, and as we've been talking about, guys, there are more transactions coming in here near these highs. We've got QLD, which is the ProShares Ultra Qs, big dark pool transaction coming in right near the highs right now. And then, of course, we've also got SOX Semiconductor, one of the most well-known, of course, semiconductor ETFs, getting a large dark pool transaction on it as well. Now, while this doesn't necessarily mean the market is going to turn to the downside, it could also be a buy. Of course, we don't know that yet. We can see that oftentimes these are near turning points. And of course, we have to consider these, and we discuss it all the time. We also saw a few Microsoft sells, most likely coming in at the exact level that previously had the number one largest transaction of the last 5 years. And of course, what did we see after earnings? A little bit of take profit. And as we'll show today, we seem to be getting a lot of correlation with a couple of big problems. Number one of those is, of course, the technicals, the supply, The level that we saw previously transacted at with some of the biggest transactions has now been transacted again. This is a share from our X account, courtesy of Volume Leaders, that obviously is in the description down below if you want to follow us there. But could it be that Wall Street are selling into this rally, looking to fill their bags maybe at a cheaper price? Well, so far we're following the 98 narrative perfectly. And of course, we never want to just rely on this type of concept, but it does make some sense. If you think about it, we are in a current potential bubble in markets with high valuations. Were we in a bubble in the 90s? Absolutely. Did the market go more ballistic afterwards? Yes. Do tariffs tend to take a long time to really cause a serious amount of pain? Traditionally, yes, it does take time to go through and actually cause the pain. So, of course, the next question is, are we going to continue to see them on the markets? Well, I think we're going to see some form of tariff, so we have to assume that it may do damage later on. But this is exactly how we're following it right now. We've come down, we've sat over the top, we've come down further, and you can see here, according to Jurian Timmer from Fidelity, basically we are at the level of supply. So it's kind of like the danger zone, and most importantly, a key level where we could see a catalyst. And one of those catalysts could be Wednesday this week, the Federal Reserve potential rate cut. Now, I'm interested to know whether you guys think there's going to be a rate cut. Pause the video here, put a comment down below. Do you think there's going to be a rate cut this week? I am guessing most of you don't, but some of you probably do. Now, the reason I say this is because what we might see is a little bit of a spat between Trump and Jerome Powell. He does have a press conference, obviously, where I'm sure he'll mention all the tools and blah, blah, blah after the rate cut decision. But if he doesn't rate cut, I could see this being a bit of a tumultuous, let's say, Truth Social kind of moment. And that could cause, of course, some issues in the markets. There are pillars in the US market. One of those is, of course, that the Federal Reserve generally does come in and they have the plunge protection team. Now, obviously, if that is questioned, we have seen that being a turning point for markets, along with the bond yields. Remember, the bond market is starting to blink a little bit here again. And that could all be a bit of a calm before the storm. Now, according to App Economy Insights, we can see the latest Palantir earnings, and on the surface, they were amazing. Customers up 39% year on year. Net dollar retention up 124%. Revenue up 39% year on year. Forward guidance up 36%. Wow. I mean, what a number, yeah? But still, the market had already bought up something like from $70 to $120. So it was a buy the rumor, sell the fact. Now, most people that are bullish right now are going to be looking at breadth. Breadth. We bought this up for weeks and weeks and weeks. We've talked about this a lot. And obviously, we do think that the market is in at least some form of very strong read traditionally. Since the 1950s, if you have a look at these wave breadth thrusts, they haven't been wrong over a 12-month read. It is important to note, though, that if we were in weird times, such as the 1930s period, which some of you obviously do believe we're in, there were failings around that period. So will this wave breadth thrust be enough to buy off? It's one of the reasons. Another thing to note as well is while we're seeing gold run again, could silver still come with it? Silver just breaking out, as you'll see later on in today's video. Pretty strong moves in gold and silver. Also a sign of the times. People are concerned. That Taiwan dollar thing is absolutely wild. Biggest move in 30 years. And the central banks of Taiwan actually came in and they said, yeah, we might need to do something about this, because obviously what does that mean for all of us? It means that semiconductors are going to get more expensive as well. Let's take a look here at rotations over the last 5 days. A mixture of risk on, thanks to technology and semis being the best. Regional banks also up there, so that's also a good sign. Last 24 hours, a little bit more defensive. Gold stocks doing the best, and things like staples, utilities, healthcare down the least. So obviously that's showing us there's a little bit of strength in the market, but ultimately it's turned more defensive last 24 hours. Now let's have a look here at central bank liquidity, small injections across the board, but I'm more interested actually at the moment in the S&P. We've left quite a few gaps behind, and this strengthens that idea of maybe some form of potentially island reversal, which is basically, for anyone that doesn't know, kind of like consolidation and then like some kind of gap down, which then creates a gap up, gap down scenario, and often you can go to move the gaps. And it also strengthens the case of course, the most traded zone, which is right here, which is that 5,600. Also the supply on the left-hand side, the weekly 20 moving average, which is here, the daily 200 moving average, the Fibonacci level that's here, the overbought levels that are here, and more importantly, the 3 gaps that we've left behind. So the 98 scenario, remember, was something like this. Okay. And while that's not for sure, of course, that is technically a prediction. And obviously, you don't want to do too many predictions in markets. You do want to be recognizing key levels. And when you recognize a key level, then you look for flows. So like we've been talking about, dark pool is one of the things that we've been watching. We're starting to see some of that appear up here. Remember in the last video, we spoke about it literally being there. Market just slightly went higher and now it's back underneath. Could it be that Wall Street knows something we don't? Here are the latest options, high and low levels for the trade session. Obviously, the level to watch is going to be 55.75. A break below that will start a series of a new lower low on the smaller timeframes and ultimately potentially a turn of trend on those timeframes as well, opening up the case for maybe some further selling. What a point we find ourselves at. Wednesday could be the catalyst, or maybe just some news-driven event based on deals. Remember, we are in news-driven events right now. What about the options market? Does that help us make any decisions? Not really. We've got pretty strong hedging now on both sides here ahead of the 7th, which is obviously going to be the big Fed day. And you can see here we've got 5600s. So that's kind of like the put support over, and that makes sense because 5600, 55.75 seems to be where the support is in the market. And of course, on the top end, we've got a 5700 level for the call wall. So the market you would expect to, if it comes down, maybe 56, 55, 75, 55, 80, that's where you'd expect some kind of buying pressure to potentially stabilize it. And then, of course, we'll see whether the bears can take control. What about something like Tesla? As you guys can see here, 300 is definitely the call wall and 260 is now the new put zone. So basically 300, 300, 300. We break through that. We enter into a strong positive gamma. That could create a squeeze 330, 350, which we'll look at later in today's video. And NVIDIA is the same. 115, 120, 115, 120. We mention it all the time. We'll look at it in a moment. So let's jump on over to the problems in the market. First up, bonds. 30Y yields. We need these yields. We need to watch these yields. We need to alert these yields, guys. If you're new to the channel, subscribe firstly. But secondly, set your alerts 4.95 and make sure that you're aware if yields spike above that zone. This seems to be the big thing in the markets right now and could be the straw that breaks the camel's back. So 30Y yields need to be watched. Another one is obviously the Taiwan dollar here. While the central bank has obviously come in to try to stabilize it, which obviously gets rid of a little bit of the concern. Take a look at that huge move last 24 hours. Biggest move in 30 years. So clearly there's a lot of uncertainty going on in these markets, and that's pushing into gold, silver, and world hedges. Now, if we have a look at the bonds market, it's stabilizing in terms of overall risk. That's of course, our bonds indicator there. And you can see that bonds yield spreads did drop on the high yield. So basically that's telling you again that it's like a calm before the storm. Do we have any signs of real tension? Not significant ones. That 30Y is the main thing, but we are starting to see kind of like a slowdown of the risk on. So it is a very key important zone. Now, you'll notice if you look at a US dollar chart, I think everybody can see this inverse head and shoulders. And obviously everybody is waiting for the daily 20 moving average. So if you're looking at this chart, daily 20 moving average, that seems to be the kind of major resistance. And you can see here all the way on the downside so far, that has been where we've seen the sells come through. So very important point here for the dollar. If you're looking at taking that long, it does proof very well into the 103 area. However, at the same time, we do not have the breach out that you require. So we don't have that flow just yet on that market. Now, what has happened is while the dollar is kind of floating around doing nothing, you can see here that gold bull is back. Wow, look at gold go. Silver's floating up too. Wow, 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 wow. This was a super level. I mean, we spoke about it. You guys, you're on top of it. You're on top of the gold at the moment. We obviously talked about the blow off top. We talked about the concept of coming down to 3,200, 3,220. We talked about if we breach this level, obviously 3,000. And gold is absolutely blitzing. It is actually surpassing my expectations of how strong I thought it would come off. I thought it might go 33.10 and find some resistance. No way. There are gold stackers going on. Lots of options and a lot of squeeze. Now, that doesn't mean you go chase it or anything, but certainly if you manage to pick it up, Well done to you. Congrats, guys. Yeah, gold back on board after being very sideways and down. That was a pretty big sell-off for gold, remember. Now, if we go over to silver, another strong move here from silver. Can we get a new high? Can we finally start to play catch-up? Silver's quite undervalued to gold. Obviously, another hedge in the economy to a degree. Another currency, realistically. And 32.75 breached here earlier in the session. That's a big deal. And of course, it could lead to that all-important 34.50 break. And if we get that, silver could be on. That's when you'll see the squeezes and maybe all those nasty paper trades that are always against silver will finally get put under some pressure. What about oil? Oil, you can see here, is dumping. Now, that is not good. I mean, I've never seen oil do this and say, wow, it's so fantastic, oil's cheap. Now, a lot of you out there probably think, wow, oil being as cheap is good. Kind of not. I mean, it seems to be OPEC getting involved. Obviously, there's a little bit of geopolitical stuff going on here in oil, which makes it very difficult to trade. You need to be aware of this. This is probably the most dangerous year to be trading oil. Frankly, I know some of you are doing it effectively. Well done to you. But generally speaking, this thing could flip like this because deals could be done, things could happen, and it is absolutely wild. But when you see oil dumping, it's notoriously a bad sign. And of course, it also means that yields must drop or there's some weakness in the economy. So something to be watching there. Celebrating low oil price, usually not a great sign. Tesla, coil. Okay, coil. Could it break through 300? Yes. If it breaks through 300, next logical step, 330 to 350. You'll see a lot of calls, I'm sure, at that point. And obviously, that'll be a positive gamma event. So at the moment, the upside is obviously what people are looking for. But if we do start to see sell-off in markets, new low, force down, 240, 260, that kind of zone at this stage. So, yeah, a lot of consolidation. Coiling, not necessarily a bad thing. Big move could be coming. Semiconductors versus SPY, one of our favorite charts at the moment. I'd say, even though it's gone above my trend line, that's not really convincing me of much just yet because it's still not above this resistance. We are watching it very, very closely. So, of course, we'll be on top of that semiconductor SPY. And as you can see here, the correlations continue. Tesla, resistance coil. Nvidia, resistance coil. Semiconductors across the board versus SPY, resistance coil. HSI, China, did big move up. Don't get me wrong, absolutely big move up. Starting to come to a gap fill and a resistance. And it's the same thing when you look at the international markets. DAX somehow made it all the way back to the highs. Resistance, potential correlation. US 2000, 2000 level. You know, again, a resistance level we've spoken about. This is why we talk at the calm before the storm, because it's a big level. Nasdaq, weekly 20, daily 200, all these types of levels. Key resistance, key supply, all of these types of things starting to apply. And obviously, overbought statistics. So when you're looking at these things, you've just got to always go with what we talk about on the channel, and that is the correlation levels matter. And often these are big turning points. Now, it could be the market keeps rallying up and you guys are celebrating out there. We did a poll on the Monday stream. I don't know what you guys were thinking. 76% of you went bearish. That made me unhappy, I got to be honest. Why? Because sometimes it's pretty clear that there is a bit of a bias due to, of course, the mainstream media and other things that we see. And you guys are all pushing towards a zone. I think what's happened here is obviously the market has continued to rally up, and we've seen 6, 7, 8, 9 days up in a row. Obviously, 10th day usually is down a little. It was, but we had 9 days up on the S&P. That's incredible. So when you tend to get that, you often see a little bit more consolidation in previous events, and I'll get the data for this in the next video, and then you get a rally up. So it's an interesting point. Certainly a key technical, is it too obvious? That's sometimes a question you have to ask yourself. What about Bitcoin? Well, this is another one that people are watching very closely. Obviously, been bullish on Bitcoin to this level. Definitely a problem zone. Most traded level here at about 96.5. So it's reacting off that. You can see a bit of a rejection. You also note that it's a fib off the high. Everyone's going super bullish on it again. And if you actually look at the structure here on the 2 hour, you can see it's starting to put pressure on that 93,000 and even 92K. And somewhere around here, if we break underneath that, then there's really no volume trade in here. So we could be moving all the way down to like an 85, where the last most traded area is. So yeah, nothing much holding it up should we break underneath 92. Certainly one to watch. And again, a correlation zone like everything else we're seeing in the market. So So what does all this bring us to? Well, it brings us to the FOMC statement and press conference. It's not so much what is said here. It is more the reaction of the market to the event and possibly more of a reaction of Trump versus Powell in this event. I think it could be a catalyst, but I'd be interested to know what you guys think. Wednesday, May the 7th, obviously paying attention. This is going to be 2:30 p.m. and 2 p.m. New York time. So that could be a catalyst. We're always looking for those types of things. And do remember, this is a news-driven market. So it is going to be news, updates, all of those types of things. We're going to bring them all to you guys. We're going to share them together, obviously find out what we can. And if you have anything that you think is worthwhile sharing with the community, always let me know. We're always interested in new ideas. And the main thing here is, of course, to make sure you subscribe and smash that like button and alert button if you love markets like we do, because, of course, we're always updating everything. So follow us on X, subscribe to the channel, guys. Quick summary of the day, basically a calm before the storm, more dark pool activity, not a huge amount, not big stuff. Volume obviously low, which is an interesting turning point potentially. And we keep finding ourselves at a level where we could easily go either way. And that's because this is a level we spoke about for ages, 5,600, 5,660. Now we're here, we're looking for that big reaction. So keep a mind open to both sides. Obviously, right now, some of the stats are pointing more towards the bearish one, but, markets will make as many people seem as stupid as possible. And that's always one of those great quotes. Bye for now. Have a great day.